Before going into today's IFX technical analysis, let's talk about one thing. Most of people think and focus on how to make millions rather than on how to become a person who can make millions. And this is where most of people go totally wrong. And one of the things you have to understand is things are not going to be easy in any way. Most people who you see, they have become successful into trading or any other career. They have been able to tackle those hard things. So it is not about things to become easier, but for you to become strong enough to handle each and everything. You have to understand the level of psychology and the skill set which brought you where you are today is not the same as level of psychology and level of skill set which brought you to where you want to be, on where you want to be next 5 years, on where you want to be tomorrow, and where you want to be to your trading career or any other career. And one more thing is, things that don't get to be easier. Don't expect things to be easier. You have to expect to be strong enough to tackle all these hard things. If you see anyone who has become successfully into a trading career or any other career, just know it is not that things was easy on their path. It is they were strong enough to tackle all those hard things. So that is very important thing for you to know. I say this simply because I'm lucky. I'm actually able to interact with a lot of traders, professional traders, newbie, and a lot of people on Instagram, Twitter, and all these platforms. And what I can say is most of traders nowadays are very softy. Most of traders are very soft. They operate and do their things by just hoping. They don't have a strategy. They don't have clear goals. They don't have clear path to go. And one biggest thing is they don't understand what is the level of skill set and level of psychology needed for a person to be consistent and a profitable forex trader. And one of the baddest thing is once they win 1, 2, 3, 4 trades, they always think like, I have already become profitable trader. Now I can do a lot of things by my own. Now I can perform like other people who make millions into the market. But having an ability to succeed in 1 trade, 2 trades, to make performance into trading view, it is not what will bring you into that profitability and level of consistency you are looking. Another thing is we are in a very lucky and unequal era of forex trading. We can call it a golden era. So in this era, it is very simple to have an access to mentors, an access to true trading skills, and access to a very huge and potential capitals. But that sad thing is, traders, they don't take advantage of all these things. Rather, they become more attracted to get rich quick, more attracted to make money as soon as possible. They don't think like you have to become an asset first before making money. You have to attract the money, not chasing money into the market. So they end up being a slave of the market. They end up being into a funding mentality. They always think like, my next challenge is going to be my payout challenge. I'm going to deposit money. This money is going to give me a breakthrough. But they don't know what really takes to get that breakthrough. They don't know what really takes to become a profitable and consistently profitable trader. So they end up losing money. And one fun more is they keep repeating mistakes. You can see a person who is blowing a profitable account, come to buy another challenge. Bring a profitable account, come to buy another challenge. At the end of the day, they get into a series of 10, 20, 30 challenges without even a single payout. And even those who get lucky to get a payout, they end blowing that account and fail to become consistent and a profitable trader. So if you think about becoming 1%, you will think about becoming the top percent of people who can make money consistent to the market. Think about the next 5 years, 10 years. Invest in yourself. You have to do things in the opposite to those, to all these other people who are focusing on getting money today or tomorrow or get rich quickly as soon as possible. And after saying so, we as IntelligenceFx, we have invested much in bringing you close to your goals. That is why we bring you this IFX technical series. And welcome. Let's see.
Then we go into this GBPCHF. As usual, let's start from the higher time frame. Let's start from the higher time frame. This is 12 months time frame. Here we see we have the very bigger move, then higher high, higher low, higher high, higher low. Then lower low, lower high, 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 lower low. Then we go into 6 months time frame. Almost everything the same. Lower low, lower high, lower low, lower high, lower low, lower high, low, high, then low. So even this small candle, small bullish candle, just see as just a lower high, then you can get a lower low. Then we go into 3 months time frame. We go into 3 months time frame. Where the same lower low, lower high, lower low, lower high, then lower low. So this can be just a lower high, and then you can get a lower low anytime soon. Then after we go to 2 months time frame, everything the same. Here you have this very nice correction, test of elimination, very nice. Then we go to monthly time frame. Monthly time frame, almost each and everything the same. And here you have this like elimination, which I've tried to hold position for so long, but it have tested so many times. It tested so many times, first, second, so many times. So I'm very sure it will not hold. I'm very sure it will not hold, simply because the more we test, the more price become weak. Then we come to this 2 weeks time frame. On this 2 weeks time frame, we see we have very nice charts. Here I have termed all this as just a correction, and then here I have this inverted elimination. So I have marked it and it is well respected. Then we go to a weekly time frame. On this weekly time frame, almost each and everything is the same, but only the issue is you have not yet broken below this level. Only the issue is you have not yet broken below this level. And then again you have this lower low, lower high, lower low, lower high. So as we have not yet created lower low, it is very possible to have a bigger correction even up to this level and still being into the downtrend. It is very possible to have a bigger correction up to this level and still being into the downtrend. And then we go to more low time frame, and then here you have 3 days time frame. So on this 3 days time frame, you see are coming from testing that level, not exactly test, but almost that level of elimination. Then again, here you have this kind of price action, high, low. So we have this elimination. This elimination, for my side, as we enter a correction, I decided to focus more on looking for bearish moves simply because I know it can become inverted elimination later on. But also, it is not something to ignore simply because we can have a test and keep creating series of more highs. As we say, we can get a correction move up to this level. Then we go to daily time frame. Daily time frame, almost each and everything the same, but we have more clean information. Here you have this high, low, high break with this case scenario of break of structure, and then you have a break of structure with elimination. But then again you have this elimination right here, which you have decided to focus much on this elimination. And then we went into this low time frame, 12 hours, 9 hours, nothing new. Here 9 hours we have this break of structure. Then we go to 6 hours, nothing new, almost everything the same. Then you go to 4 hours. Here in 4 hours you have more clean information, and here you have this break of structure. Then we go to more low time frame where we have elimination. As we know, elimination is more strong compared to break of structure. So We can have a correction up to this level and keep creating series of more lows. This is all what I see on GBPCHF. I recorded weekly market breakdown when the price was on this candlestick right here. And few moments later, we got this price movement come and take this diminution, which also aligns with the break of structure. As we know, when diminution aligns with the break of structure, it indicated that it is very, very strong level. And strong level resulted to this price reaction. And this price movement, this reaction didn't manage to get any kind of closure above this bearish diminution. It made getting any kind of closure above this bearish diminution. And not getting any kind of closure above this bearish diminution was another just a confirmation that we are still into a bearish movement. For this market to be into bullish movement, to be into high probability bullish movement, you're supposed to have a candle closure above diminution. Then let's go into low time frame. In these low time frames, you are going to learn a lot of things, especially to those non-members as well as live trading room members. To community members, I know they are aware of all these informations. So because each and everything is on the course, but also we always explain each and everything to the community and into Tuesday market breakdown, midweek market breakdown, and all the trades recap. So it is just the repetition, and we know repetition is very important thing in the process of mastery. So let's go to these low time frames. Let's start from this 12 hours time frame. On this 12 hours time frame, as I said, we recorded weekly market breakdown when we was on this level right here. It was noted formation, this formation of this strong bearish candle was not yet. So let me cut the price. I want to show you very important things on this level. You know, most of retail traders, after having lower low, lower high, and then lower low, they can start thinking like they want to take a position on this level right here and not this one. And most people, they don't have even an idea about taking the trade on this level right here. Rather, they will focus on taking trade losses, a lot of losses. We call them one simple. Actually, market is moving in a series of percent correction. Most of the market, it looks like highs and lows, testing process phase. So when you're talking about correction, correction can break number of structures, and these structures, they can be into just a part of the correction. You can keep creating series of more lows. So for most of people, they can consider this a break of structure as changing the direction of the market, or they can consider selling and finding opportunities on these market structures. It is the same as what happened on this GBPCHF. We got an impressive phase, which is it is actually lower low, lower high, and then lower low. So most people can focus on finding selling opportunity on this level. But for our side, we focus on finding selling opportunity in the level above, in the level where there is more strong supply of liquidity, in the level which there is in the level which is more strong compared to this one. This is not more strong simply because there's an infrastructure. If it could be formed after creation of lower low. Let's take an example. If we form lower low, lower high, and then lower low, it is where we can focus on finding selling opportunity right here, but not in this kind of case scenario. Then again, we can think like, what is the reason for this kind of price movement? As we know, each and every price movement have the reason. as how we explained in why for price in the cause. So let's look for a reason into the low time frame. Example here, it is 9 hours time frame. We see we have this high, higher low, higher high, and then you break your structure. And on this break of structure, it aligns with this inverted diminution. It aligns with this inverted diminution. So I will mark the inverted diminution simply because we know it is more strong. And after marking this inverted diminution, as we see, price tested for the first time, second time, third time, and even this one the fourth times. So we know the more price test is, the more an area become weak. So the purpose of just testing this level, it is so that you can make this level very weak, and you can break it to test on those levels with high supply of liquidity. We can break and test levels with high supply of liquidity. Even on these lows right here, we have already defined that purpose of testing these lows area with this price reaction just to make it weak, so that you can break it later. To make it weak so that you can break it later. And some of people can try to get into this kind of position, which can be very, very short term. And it is fine if you really know that you take a position right here and an exit point, it is right here. But if you are taking a position when thinking like you're going into a long-term movement, it can end up into a break-even or actually a loss. Then after, let me back into 12 hours time frame. I want to show you one more thing. Let me cut the price again. Right here we have this lower low, lower high, lower low, and then you break your structure. Candlestick above this level right here. So most of people again can think like this is the correction, and then you're going to get an impressive move. And they will start looking for a bullish position on these levels. They'll start looking for a bullish position on these levels. But actually, for our side, we just know this is an infrastructure and it doesn't define changing the direction of the market in any way. But we also know that we are just into a price movement to come and take those diminutions of the low time frame. We'll see them as how I explained them even on the weekly market breakdown. So that is all what we was looking at, notes, thinking like we are going to get any kind of reverse and continued more bullish movement. And another reason why we didn't focus on finding any kind of selling opportunity in between, it is simply because you are coming from testing a daily time frame level. We know daily time frame, it is a very strong level. So we have accumulated enough supply of liquidity on certain price level, which it is very rare to get prices moving from daily time frame, and it is going to be held by price which it is into the low time frame. We know higher time frames hold the price which are also into the higher time frames, or hold the price which are also coming from the higher time frames. So what I mean is, let's take an example. We have a certain price level right here, and it is found into the higher time frame. Let's take an example of a certain price level which is found into the higher time frame. And then we got a series of lower lows to come and test on this level, and then you started bullish movement. So after testing on this level of daily time frame into the low time frames, you can find series of lower lows into this structure or into this movement right here. So you can try finding selling opportunity into these structures which are found in the low time frame. You'll be totally wrong and you'll get a lot of stop loss hit. Simply because market is moving from the higher time frame, and higher time frame market which is coming from testing the higher time frame. It will also be held by higher time frame levels and not these low time frame levels. So that is all. Then let's go to more low time frame, and here it is 9 hours time frame. 9 hours time frame, almost each and everything was the same. Here you had this inverted diminution as well as the break of structure. It was tested several times before having a break. Then let's go to more low time frame. Here you have this 6 hours time frame, nothing new, complete nothing new. Let me just remove this psychological price level line right here. Let me just remove this psychological price level, which it was inverted elimination. Then after you can see even on this recently market price right here, this a high, a low, higher high, then you break. So most of retail traders can think like there's a confirmation for this movement. They can start finding selling opportunity on these prices right here, but it was actually a trap. The real price movement was supposed to look at this one above, and this is very, very common price pattern into the markets. We can have this kind of price movement with a certain price level which we are supposed to test, and then we can get a correction, then we can miss that position, so that most people can find a selling opportunity on this level right here. But when we come back, we go to original price level, and then we continue with creating series of more lows, and this it is where we get majority of scenario, which we call it a break of structure but failure to break a trend. So you should have a level which define a break of trend and level which define a break of structure. And here it is where you know it is not all break of structures indicate that we have broken the trend, or not all break of structures indicated that you have shifted the direction of the market. So it is the same issue. Then we go to 4 hours time frame, and 4 hour time frame we get more clean price action. We see here it's having this higher high, higher low, higher high, higher low, higher high. Then you break off structure. As I explained on weekly market breakdown, when we have break off structure and domination in place, we always consider domination because it is more strong compared to break off structure. And if you consider break off structure, you must just know that you're going to take somehow bigger risk, or you have to widen your stop loss to cover those areas of domination. Then we go to 3 hours time frame. In 3 hours time frame, the message was more clear, and in 3 hours time frame, the message was more clear. We had this domination, very, very clean domination, and then very strong price movement. So just knowing we are coming to test a domination. Then we go to 2 hours time frame. And on this 2 hours time frame, we have more interesting view, actually a domination, and then here you have this kind of market structure. Price was coming to test this level of daily time frame. First test, second test, and then the third test. And then we got this kind of movement like a correction. So after having this correction, it was actually a correction to come and test this domination. So just knowing the purpose of the correction is to accumulate more liquidity and go and test those high levels above, and go test levels above. What can say to accumulate enough supply of liquidity so that the price can reach in a level which it is above this level right here. So price tested on this level, and then we got that impulsive phase to come and test on our targeted level. Then it was our level of entry, and it is where we started this bigger movement. And then on the breakdown, as you have seen, I've marked this level with an alarm. It is simply because first, it is our level of daily time frame, domination of daily time frame. This one as my point of concentration, but also I decided to mark that level of daily time frame with an alarm so that I can get alerted when we approach on this level. Simply because most of the time, especially in pair like GBPCHF, when we set an alarm on exactly the same price you are going to enter, you can get you can see we get a test, and then in a very few seconds, price can move tens of pips, 10 pips, 12 pips, or even more. So I set my alarm in somewhere below. Then when the price approaches to this level, I will be on the market and be very keen waiting for my entry to reach. And it is where I will execute until I get a very small risk trade. So that was all when it comes to this level. And then here in 1 hour time frame, we was having this an interesting view. First, after reaching on this level, we executed position into two trading accounts, into two different trading accounts. So after executing trades into two trading accounts, we was looking on what is going to happen. We was looking for a break of structure, having a candle closure below this level right here. And in this server, like I wonder, a break of structure was not seen. But in server like .com, the break of structure was well seen. And this is where we remind each other to look for multiple servers when trading. So let's take an example on this kind of other servers, server like Paperstone. Let's look. Example here, to Paperstone, we see it was having this. I was monitoring when the time price was on this level. So here was my line. I was just waiting for a break for any candle closure below. So we get the candle closure below, and we decided to take another selling opportunity right here on this break of structure. Right here on this break of structure. And another thing is, on the same level, which he was looking to take opportunity as a break of structure, he was having this inverted domination. So it was like confirmation within confirmation. Even if when you go to server like Black Bull, or even let's take on 8Cup, it was very simple. It had a very clean candle closing below, very clean candle closing below, and then a very nice movement to test it, inverted domination as well as a break of structure. So it was this simple. Executed another position on this level, and it was just in one account, not all accounts, because we know when you trade the same positions in all your accounts, it involves a lot of risk. So you must have a strong management plan in every single account, and the overall structure on how you're going to monitor your accounts. So that is all. And when it comes to management, it was very simple. We had only one level as our level of concentration, which is this level of break of structure. So when you're approaching on this level, we started looking for a bullish position, but at the same time, we closed some percentage. And in that account where we was having two positions, we just closed one position, and in another account where we just have one position, we closed half of that position after reaching on this level. And actually, currently, into this very recently market price action, you have this lower low, lower high, lower low, though we know it is infrastructures. So we got the test of this level, the price reaction, and then even the second test. So recently we can define that this is lower low, lower high, lower low, lower high, and then lower low. So this is lower high, and you're going to create series of more lows. But also why I decided to close 50% of the position and some of the position is simply because we are trading by following principles and rules. As we know, you must have a set of principles and set of rules in place so that you cannot make decisions depending on emotions or depending on how market is catching, how the market is attractive to you, how market is attractive to your eyes. As we also know that we can find even a correction up to this level of domination, or even up to our entry and still being into a bearish movement. So all the time we should take our trade management in place. Execution is one thing, but also you have to manage accordingly, but also you have to have a set of principles which can give us a clean exit points. So that is all on how we was managing this GBPCHF. I will explain more this pair on weekly market breakdown. Then another pair we traded this week, it is USDCAD. So USDCAD, it was just a counter trend and not a trade of the main trend. And it was also very, very simple. Actually, from the starting of the week or weekly market breakdown, I explained that this pair is very, very strong into a very, very strong bullish trend. And currently, we are looking for bullish opportunity. But also, market is not moving in a straight line. Market is moving in a series of higher highs and higher lows into a bullish trend. So, we have higher high, higher low, higher high, higher low, higher high. So we always look for opportunities on these highs so that you can make higher low, but also looking at an opportunity on these higher lows so that you can make higher high. Looking at an opportunity on these higher highs so that you can make higher low, and looking at an opportunity on these higher lows so that you can make higher high. We have explained all these things and psychology behind all this movement into the cause. So if you're a community member and you get any kind of confusion, you can just pass through the course again on the topic called psychology of the market trend. Then after, we was looking on this kind of movement, higher high, higher low, then series of highs and lows, then higher high, higher low, higher high, higher low, then higher high, higher low, and then this was just infrastructure as it was not formed above this level right here. Then you created a new high. So immediately after creation of new higher high, I was just very keen into the low time frame, looking for an opportunity. And even before, right here, I was having this kind of price action movement come and take this diminution, which was very short term. And we know it is short term simply because the main trend is the bullish trend. And then after, we got creation of higher high and then higher low. Then we got this higher high, higher low, higher high, higher low, higher high. So here you had the failure to create a new higher high. So after having this failure to create a new high, this very strong bearish candle. And after this strong bearish candle, I started looking for a bearish opportunity. So the bearish opportunity was on this diminution right here. Was this diminution, which was aligns with the beautiful structure. And we executed the trade in the 20 direction like 35 pips. So later on, we get the reversal. But we was aware about the reversal simply because we was expecting that if you're going to a counter trend, we should get the candle closure below this level. We should create a lower low, but we had a failure to create a lower low. So after 4-hour candle closure, we decided just to close at a break even and waiting for more clean opportunity. So after closing at break even, the next two 4-hour candles, we created a new higher high. And after creation of new higher high, we started again looking for an opportunity to take a counter trend, but also this counter trend just a riding fuel to our areas where we have orders for our main trend, or where we can get opportunities or messages for joining the new trend. Then I went into 3 hours time frame. In this 3 hours time frame, nothing new, almost each and everything is the same. Then 2-hour time frame. 2-hour time frame again, nothing new, almost each and everything is the same. But also, one more thing is, I focused much on this USDCAD this week, simply because I was just knowing this week we had these fundamentals about CAD. And just one more thing is, I decided to focus on all CAD pairs, GBP CAD, USD CAD, Euro CAD, and all other CAD pairs, because I have just to choose 1 or 2 pairs which have more interesting view or more interesting price action, and find an opportunity even before the time of fundamental release. Then I can capitalize on that effectively, rather than looking for all these pairs of maybe CAD or any fundamental you are looking. And then in case you get a loss on one pair, it can be in all pairs. So from my side, I decided just to look on one pair, which I chose the USD card due to its appearance and all the behaviors which has been showing, which has been shown on this USDCAD on previous days and previous fundamental releases. But also, as we always say, I have written even an article about trading fundamentals, which is available in the IntelligenceFx app for free, explaining that it is very risky to trade on the time of fundamental release, simply because to most of our brokers, there is widening of spreads, there is slippage and even manipulation. So you can get into a trade few hours before before release of fundamentals, and on the time of fundamental, just enjoy the volatility and entire movements. Then we go into 1 hour time frame, where it is the price we received our first message about finding selling opportunity. It is the first time frame we received our selling message. So here we had this bearish diminution. So this diminution was the first indication for selling opportunity. And after having this diminution, it's just to go into low time frames to find selling opportunity. I shared this selling opportunity even into the community. So I went into this 45 minutes time frame, and in 45 minutes time frame, I just realized that you have this accumulation. We have this accumulation. For those who are not into the course, only the difference between accumulation and correction is that correction is for continuation and the accumulation is for reversal. So you have just know how to differentiate them. But for this case, after seeing this kind of accumulation in 45 minutes time frame, I just asked myself, what is the next move recently? We know market is not moving in a straight line, and in 4 hour time frame, we are coming from we are into an impulsive move to create a new high. This is a 4 hour time frame. And when we go into 45 minutes time frame, we are into this kind of movements, which we are asking ourselves to be a correction or accumulation. So for the fact that after creation of a new high, you always expect to have a higher low, we are looking for this as a message that you're accumulating liquidity so that you can have a bearish movement, that you can have a movement to create a higher low. That is all. Then after we go into more low time frame, where we have this 30 minutes time frame, it is the time frame which we found our entry. Actually, when looking on this area more clear and reading each and every kind of price action, we see here we have this diminution of 30 minutes time frame, but also we have this break of structure, which it is intrastructure, but also it's a diminution as a confirmation. So we executed our first trade on this level right here. But also we had the second trade, where the second trade was found into more low time frame diminution. And the reason why we considered this low time frame diminution, and it was looking like there is also possibility of going to low time frame, it is simply because each and every time frame have its own trend, but it is in this way. Let's take an example. Into the higher time frame, we have higher high, higher low, then higher high, and then this is higher time frame. So we know into this series of candles to create higher high, higher low, and then higher high, we have these weeks. We have these weeks all over the place. We have these weeks, and these weeks into the low time frame, they are part of the candles. All these weeks into the low time frame, they are part of the candles. So low time, if this is high time frame trend, low time frame trend will be somewhere near above. High time frame trend, it will be somewhere near above. So if high time frame, it will be somewhere near above, and each and every trend how it is, if each and every time frame how it is on trend, that means if we have already tested a trend of 30 minutes time frame on this diminution right here, we can go also test a diminution of low time frame. We can go also test a diminution of low time frame. So I went into this 20 minutes time frame. Then I went into this 20 minutes time frame, And on the 20 minutes time frame, we see we have this diminution, which also aligns with the break-off structure. We have this diminution, which also aligns with the break-off structure. So we got the movement to take this diminution where we executed our second position. And actually, this in this kind of a trade where we know we are taking a trade in certain price level, but we can go and test another price level and above. We always just divide risky, and set also give us also help us to know where we can set our stop loss. So example, in this case, just set our stop loss above the low time frame diminution, knowing that if we go above low time frames diminution, the trade will be invalid. So we came up to this level, get the second trade, and then we got this very strong bearish movement. And on the time of fundamental release, price was somewhere on these levels. On the time of fundamental release, price was somewhere on these levels right here. And it was very simple, simply because here you see we had this higher high, higher low, higher high, test of diminution, higher high, higher low, higher high, and then break of structure. So we know market will not come back. Market will not come back to these high levels because the cycle have already finished. We have already done each and everything: impulse, correction, testing, diminution. So the cycle is complete. So we got the test of this level right here, which is a break of structure. And after having a break of structure, we see here we have a lot of case scenario which aligns 100%. At first, we had this lower low, lower high, lower low. So we got the break of structure, but we didn't manage to break the trend. And after having a break of structure without breaking a trend, again we got this diminution and the test of a diminution. So a test of a diminution aligns with the test of trend trading. I see Brother Solomon Scott was having an entry on this level right here, a level of diminution. And then again, we got another impulsive candle and left a diminution. So we got another test of the diminution. It was that simple. It was confirmation within confirmation, confirmation within confirmation. But for myself, I didn't execute this trade because it was a time of fundamental release. It was nearly to time of fundamental release, and I was also I was already having two positions from these levels. So that is all. Let me jump to another pair, which it is EURNZD. EURNZD, it is one of the pair with very clean price action into the higher time frame. We see we had this downtrend, which it is lower low, lower high, lower low, lower high, lower low. Then we got starting of the new trend, where we have an impressive fresh correction and currently into an impressive phase. Entire this year, we have been into this a very, very bullish movement. And then we go to 6 months time frame. Almost each and everything is the same. We see we have this break of structure, very nice impulse correction. But to just see nature of this pair is creating this kind of price actions, very strong wicks into higher time frame. So we must be aware of this. It means there is very high volatility on this pair. Then we go to 3 months time frame. 3 months time frame on this recently price action, we see more clean price action and more clean bullish trend. And these more clean bullish trends, let me define it. Here you have the starting of the trend and then the higher high, then higher low, and then here you have this higher high. Then a small market structure. But we don't take this right here as a clean, break of structure, simply because we don't take this under the clean market structure or clean series of highs and lows, simply because very small difference with the previous high. But also, if it will be only very small difference with the previous high, we could take it into consideration at the new high. But very clean, very small difference, but also you have a price reaction, as how I have defined functions of price reaction into the cause. So here it is our true higher high, and then this was just part of the correction to create a higher low. And then after this correction to create a higher low, recently we see we're into this bullish movement to create a higher high again. So what I expect to my side recently is, as how you have seen, you have got this very strong price reaction, very strong price reaction. I expect the same. We can have very strong price reaction right here. So it is like that, as there is nothing new into the market. It's just a repetition of what is happening. Then here recently, we have this more close price reaction, where we have this high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, and then higher high. Then we go to monthly time frame. Here in monthly time frame, almost everything the same. Starting of the trend, higher high, I mean this recently trend. Then higher low, higher high, higher low, higher high, higher low, then higher high. Then we go to 2 weeks time frame. 2 weeks time frame, almost everything the same, but here we see we have this indecision candle, and then after this indecision candle, it looks like we have this bearish move. So for this case, we know main trend, it is the bullish trend. So in case we get any movement for a bearish move, as a bearish move, it will be just a counter trend. And this counter trend, we can take them into consideration and you can get a very nice opportunity. But we should be aware that these are just counter trends. We should be aware that these are just counter trends, and being aware that you are trading either a counter trend or a main trend, which will help you to have a very nice exit. It will help you to have a very nice exit. As we know, having a nice entry, it is one thing, but also to know when to go out, it is another thing. So let's be keen. Then we continue looking into this more close price action. And as we know, this previous price action, it is very important at the beginning, but when looking for an entry, it is not that essential. So that is the reason why we focus more on this recently price action. Then here we see starting of the trend, starting of the trend, higher high, higher low, higher high, higher low, higher high, higher low. Then here have this high. It looks like have created a higher high, but as I said from the previous pair, here we have this, from the previous scenario, we have this price reaction, and this is weekly time frame. So when we just go into daily, we'll see there is a series of candles which represented this price reaction. Then we go into 3 days time frame, almost delivering the same. Entire this movement just a single correction and then impulse, and then currently we are into correction. Then we go to daily time frame. Here on this daily time frame, we have more clean price action. Here on this daily time frame, we have more clean price action. So it is very simple. We see we have series of highs and lows, higher high, higher low, higher high, higher low. So we are going to create a new high anytime, but also should define how this correction created, simply because we know this correction can last even up to a certain price level right here, validation price level from the higher time frame, and it's still being into a valid bullish trend. As also when you look here, have a test of divination. This is very nice liquidation impulse. So it is very possible to have a liquidation and still keep creating series of more lows and still being into the correction. Then we go to 12 hours time frame. 12 hours time frame, here almost delivering the same, but we have this information, very important information. We have this very important information. Here we have this starting of the trend and then lower low, and then here we have lower high, and then you have lower low. But here we have this previous low. we have this previous low right here. So here this previous low was acting like just a psychological price level, a level which can trap most of retail traders and think like we have a reason for reverse on those levels, while there is no any strong reason for reversal in those areas. They can trap a lot of retail traders and think like we have a very strong reason for reversal while we don't have. When you look at it more clear, you see we have this candle like a bullish candle, which most of retail traders, when we are into this kind of price action, can think like you're going to get a bullish move, but we can keep creating series of more lows. If still you are not competent on how to identify psychological price levels, just go back to the course and you'll see all these concepts. And in case you get any question, let's link up anytime. But also here we have this, within an impulsive phase, we also have structures in between. So on this recently impulsive phase, we have this lower low, lower high, and then lower low. That is the reason I have marked this level as my validation price level, but just weak simply because it is just an interstructure. If it could be created somewhere right here and then lower low, lower high, I could take it into consideration very seriously. But currently, I will not take it into serious consideration simply because it was formed before creation of lower low. Then we go to 9 hours time frame. 9 hours time frame, we have this level where it is very strong level. I have just marked it, but also I went into more low time frame. And then here it is 6 hours time frame, almost the same, but we have this diminution right here. We have this diminution right here. And then we go to 4-hour time frame. 4-hour time frame, almost the same. We still have this liquidation process, and then we go to an impulsive phase. So after this impulsive phase, what we expect is just having another liquidation. But also, we should not forget that entire this movement is just a correction move. So we can get a movement up to a certain price level and still being into more bullish movements. We can get a movement and still being into a very bullish movement. And then again, here into this recently market, we have this starting of the trend, higher high, higher low, and then higher high. So we can get a higher low and then keep creating a series of more highs, as I say. So I went into more low time frame, and here nothing new, actually almost everything the same. Here we see it was created below, but higher time frame is always stronger compared to low time frame. And I have marked this level as my target because the level with very high supply of liquidity. So here we have this break of structure as one of the indication that it's going to be ending of our correction. One of the indication, not the total indication. Then we go into this 2 hours time frame. In this 2 hours time frame, it is where we got the total indication, diminution. So I see we can have a very nice correction up to this level and keep creating series of more highs. Of course, I understand most of people are looking for selling opportunity on this market structure, but for the fact that it was not created below, it was not created after breaking our previous lower low, I will not take it into strong consideration. Rather, for my side, it can be just part of the correction. It can be part of the correction. It's fine. We can get some sort of reaction, but I don't think it will be a strong reaction to give us a lower low. But as you see, why still I marked it is simply because I know I can take a new message on this level and use it effectively. That is all. Recorded weekly market breakdown when the price was on this level right here. I recorded weekly market breakdown when the price was on this level right here. And we was looking for a bullish opportunity somewhere around these levels. And price then came back to test on these levels, But again, on the weekly market breakdown, how I explained, the target was on this price right here. So we came straight to our target, and I have seen some of the members have a trade on this level right here, and we discussed even all these trades into Wednesday market breakdown, and it was this simple. This movement is just a correction move. This movement, it is just a correction move, very, very clean correction. And then after, we just see was having a price reaction, then price reaction, and then a straight movement up to this level. Actually, we didn't consider this elimination simply because it was already tested, as you see right here. Elimination was already tested, so we didn't take it into consideration. We considered only break of structure. And then when going into this low time frame, like 3 hours time frame, it was having this kind of price action, series of highs and lows, and then we left the elimination. So even for those who was aggressive, take the first entry. Again, for others was having the second entry right here, and it was very, very clean opportunity. It was very clean opportunity. We got the test of the elimination, and then very strong bearish movement. So here we had this liquidation process, but again, just repeated this liquidation process. Though this liquidation didn't result to a new lower low. This liquidation right here didn't result into a new lower low, and it's simply because, as I say, we are into a bullish trend, and even recently we have left this very nice elimination. So we'll be looking for a bullish opportunity into the coming week due to these signals. And the other thing is, on the case of management, after reaching on this level, as we know market is in the bullish trend, I started looking on how the price will react. So after having this bearish candle and the next candle bullish candle, I just closed like 60% of the position and keep the remaining running. And after breaking this structure again, I will close the full position. This is all on what I was looking on this week on EURNDZ. Then we go to GBPNZD. GBPNZD, it was very, very clear, very, very clean. So here we have this inverted elimination, and we got this kind of movement coming from testing elimination again. As we said, elimination currently is very, very strong reason into the market. So we got this lower low, lower high, lower low. And on this first move, we got the test of elimination, and then here failure to create a new lower low. And after having this failure to create new lower low, I was discussing even to the community with some of the members that we can find a potential buying opportunity. And even myself, I executed that buying opportunity somewhere right here. And what I was expecting is just to have a bullish candle. I was expecting just to have a bullish candle, but we failed to manage to create a bullish candlestick. And the reason why I was waiting for a bullish candle, it is simply because we have to prove, we have to verify that we are coming into a strong level. But having a failure to create a bullish candle, it showed that you're not coming into that very strong level. And we tested this inverted elimination. And after testing this inverted elimination, we created this recent elimination. So after knowing that you have created recent elimination, I started focusing on the low time frame, looking for selling opportunity. I went into this 3 hours time frame, nothing new, almost each and everything is the same, and then 2 hours time frame. On 2 hour time frame, had this break of structure as well as price reaction to indicate that sellers are very strong into the market. And then 1 hour time frame. And on this 1 hour time frame, it is where we always do our management in this kind of case scenario. So right here, you have the test of the break of structure, which also aligns with the elimination as a confirmation. Then after having this bullish candle, after having this rejection with the bearish candle, I just closed my positions because I was expecting this to close bullish. And having this candle as bearish candle, it was just a message that we are into a lower low, lower high, and then lower low again. So we closed this into some profits. And then after I went into more low time frame to find more clean opportunity. Here in 45, nothing new, no any new message as you see. Then 30 minutes time frame. 30 minutes time frame had this inverted diminution right here, and it's where we executed our trade. And then we still was having this another inverted diminution, and it was respected. So I didn't take any kind of a trade on this first inverted diminution, simply because I know market is moving in repetition of behaviors and repetition of patterns. So I didn't want it to be too aggressive on this scenario where we are trading we are trading into a very corrective phase. So after having this first move, it is well executed into the second move. We got the movement and completed for the second time, and we created a series of more lows. And after creating this lower low, lower high, lower low, I just shifted my stop loss to entry. And then after, I went back into 1 hour time frame to do trade management. As I said, on this case scenario, we always consider mostly 1 hour to do our trade management. And then on 1 hour, we got this diminution with the test. So from my side, immediately after having diminution, I closed like 60% of the position. I closed like 60% of the position. And why not full percent of the position? It is simply because I knew there is even possibility of coming back to test this inverted diminution, or coming back to test even these levels of price reaction, and it's still being into low time frame. But I will present more on what I look for the coming week into weekly market breakdown. Though another reason why I didn't close this position is I was looking for daily candle to close. Though into the daily candle, I got very different message. I got very different message. On this daily time frame, we all know that this is just a correction phase. This is just a correction phase, but main trend we enter a bullish move. And then again, we know that this correction, there is patterns within patterns or corrections within corrections. So this is an impulsive phase, and you enter a correction phase of the correction. So it is very, very possible to continue being into the correction and still get that impulsive move we are looking currently. But also another thing is we can get a retracement up to certain price level and still into the downtrend. So for this bearish bias into the low time frame, we are not supposed to hold a position like it is not coming back. So what is mostly important is just to set our trade management rules in place and act accordingly. Then the same time I was having some of USD pairs into a watch list, and I shared all these pairs into a community. Let's start with EURUSD. On this EURUSD, EURUSD, you know, we have reached in a level where it is a very potential level of higher time frame. Let's go to weekly time frame and see. Weekly time frame have reached on this level. So it is the level which can act as, which is the level which you expect to be a psychological price level, simply because the main trend is still a bearish trend, but also we know we can get some of the rejections up to a certain time frame, up to a price reactions, up to diminution, and still being into the downtrend. So after approaching on this level, we started looking for counter trend opportunity, and it was confirmation trade. So here on this 4-hour time frame, we had this kind of price action, higher high, higher low, and then higher high. So we got the validation price level, but also diminution in place. So I decided to look for bullish trade on this level. I went into different time frame, 3 hours, 2 hours, and even 1 hour to find just a clean opportunity. And here on this 45 minutes time frame, I found this one, a break of structure and this price reaction. So I executed my trade on this level. So I got this very strong, impressive movement. But also, I was monitoring this trade on a level of diminution of 1 hour, but also level of diminution of 4 hours. So on this 1 hour time frame, I was monitoring this trade on this level right here to see how the price will react on this level right here. But also in 4 hour time frame, I was looking to see how price will react on this level right here. So I managed this position on this 1 hour time frame simply because it was more clean. So I say it is more clean because we already have this lower low, lower high, lower low, and a break of structure in place. That is all. So after having a very strong reaction for a bearish, I decided to close 50% of the movement. Decided to close 50% of the movement, and the reason why I closed 50% of the movement and not an entire position, it is this simple. This is the price reaction, and it is a very strong bearish move. It is right, and also it is the message that sellers are into control. But the same thing can happen like this one, a very strong price reaction, but the coming candle may need to engulf entire previous candlestick. So I was thinking it is also very possible to engulf entire this movement and still being into a bullish movement. And then again, after closing 50% of the move or a very good amount of profit on this level, I don't have a need to be emotional and look on the message on even these small time frame candles. Rather, I have to wait and see if we get a new message from the market over time or new market structure. So even recently, I have one position on this level. As we know here, it is higher high, higher low, higher high, higher low, and here have a price reaction. We know there is possibility of getting whatever move, but we'll discuss in more details into the weekly market breakdown. Then AUD/USD, the same. I had this bullish trade. I shared it into the community. It was very clean break of structure. First, I executed my trade on this level. We got some movement, and then coming back to this level again. I didn't add any position, and then we got this very strong movement. But later on, we came back to an entry again. And on this AUD/USD, I didn't close even a single percent. The full volume is still running. And I will make decision after the market open. So because I was waiting for a message from the daily time frame. So the daily have closed. So next week, after the market open, I will make a clear decision. But again, I will explain each and everything on the weekly market breakdown. Then we jump to NZD/USD. NZD/USD was very, very clear. NZD/USD was very, very clear. It was this simple, an accumulation and the preparation for the bigger move. This accumulation was the same like this one. The same like this one. So it is just a preparation for the bigger move. And my first entry was somewhere right here, but it was missed. So I decided to focus on finding a second opportunity. And it was this simple, higher high, higher low, then higher high. So this level was my entry. It was just elimination, but also into the low time frame, like 1 hour. It was the clean break of structure. It was a very clean break of structure. So after having this kind of movement into 1 hour time frame, higher high, higher low, higher high, higher low, higher high, higher low, market was moving like somehow into a correction nature. After having this strong bearish candle, I just closed like 60% of the position so that I can move into free risk and no any emotion at this trade. So currently it's back into an entry, but it's still into the position. And as I said on the AUDUSD, I was looking to take a message after a daily candle close. So daily candle have already closed, and I'll explain more on weekly market breakdown. Then we go to this Euro GBP. Euro GBP, we discussed it on Tuesday market breakdown as well as on weekly market breakdown, even on Wednesday market live market analysis. And it was this simple. I remember Brother Jackson presented it on Wednesday market breakdown, if not Tuesday. It was Tuesday market breakdown. Brother Jackson presented it on Tuesday market breakdown, and we was all looking to find a bullish opportunity on this level right here. But I shared into the community after approaching this level that you are not supposed to find a bullish opportunity anymore, simply because you are coming from testing inverted domination, which it is a very, very strong level. So we just know it's going to test on another level, but not this one of the current trend. And we got the movement to come and take this break of structure, but simply because you were thinking like, we have tested this level right here, we have tested this level right here. We're thinking like this is lower low, lower high, and then lower low. So you can get lower high and keep creating series of more lows. So we decided to look for bearish opportunity. Decided to look for a bearish opportunity. So we executed an entry on this level right here as just a part of elimination. We went into profit few pips and laid down, we get stopped out, a stop loss hit. So after taking a stop loss, I just come back to review my trades. Later on, I just realized that from the higher time frame, daily time frame, and all other time frame above 4 hours, we was having a very strong movement to come and test this break of structure, which in some of the time frame it was the domination. So it was not right looking for a selling opportunity. Then again, I remember we focused even finding selling opportunity right here. So then again, we was having this information, higher high, higher low, and then higher high. This is enough. It was enough to tell us that we are going into a bullish movement, but we didn't consider this much. And I have just corrected all these mistakes, and I have got something new on this pair. Recorded it well into my journal and putting everything in place so that I cannot repeat this kind of a trade into my career. That is all what we have on Euro GBP. Actually have some of the pair like Euro Audi. Euro Audi was looking for a selling opportunity. We didn't even reach on our level of concentration. Then the same on GBP card, we was looking for selling opportunity, come back and take this price reaction at the same time, but you didn't get an opportunity. And even on Monday, I've seen Brother Jackson and other members was having positions from these levels. But for myself, I didn't find one. Then we had Euro JPY. Euro JPY, it was very simple. I was looking for bullish opportunity on these nominations, but price didn't come back. Though I see on the coming week we have a very nice potential. I will explain it into weekly market breakdown. Then again, GBPJPY was looking for a bullish opportunity, didn't find one. Then USDCHF, the same thing, was looking for a bullish opportunity on these levels, but price didn't retrace. Then we had pair like GBP Audi was looking for a bullish opportunity right here, but for my side, I didn't execute that position due to the reason that I was thinking it is very, very small counter trend, and my main focus was finding selling opportunity. And I remember we discussed you're coming from testing a break of structure and then domination, but for my side, I didn't execute it. This trade, rather, I decided to wait for a bearish opportunity. And even currently, I've already changed my bias somehow, and I will explain it into weekly market breakdown. I mean, not bias, just a point to take a trade. and I'll explain it into weekly market breakdown. This is all I can say. Thank you so much for watching. Take this weekend to prepare your weekly market breakdown. Take this weekend to do advanced self-review. And at the end, I wish you all the best. Thank you so much. See you on weekly market breakdown.
If you have enjoyed and find valuable insights on this video, please drop your comments, like, and if you are new, subscribe to our channel. More videos like this are coming. And one more very important thing is, if you want an access to more videos like this, kindly download our application. It is available in Play Store as well as App Store for free. And upgrade anytime to completely change your trading career by having an access to our courses, having an access to daily market breakdown, midweek market breakdown, weekly market breakdown, our trades, all our trends recap, but also our one and only, our live trading room. You are most welcome. We are ready to change your trading career. Thanks.